The email arrives at 2:17 in the afternoon. Your manager asks you to join a call in 10 minutes. There's an HR person on the call you have never spoken to. The call lasts 11 minutes. You are laid off. Effective immediately. You close the laptop and the room is the same room it was before and nothing in it has changed, and somehow everything has. There are 3 numbers that decide whether the next week goes sideways or stays controlled. Your cash runway in days, your fixed obligations in dollars per month, and the exact date your benefits end. If you know those 3 numbers by tonight, you are not panicking, you are planning. Most people spend the first 48 hours in a fog and skip the part where the numbers are still accessible and the decisions are still reversible. You are not going to do that. The first thing you do before you close any browser tabs or hand back any equipment is pull up every account balance you have access to. Checking, savings, any investment accounts you could access in a real emergency. Write the total down somewhere physical. A notebook, the back of an envelope, it does not matter. What matters is that you have a single number representing what exists right now. That is your runway before you know what your runway is. Then you make a list. Not a budget yet. A list. Every bill that will come, due regardless of what you do. Rent or mortgage, car payment, insurance, utilities, minimum debt payments, phone, the things that arrive whether or not you decide they should. Add them up. Divide your cash total by that monthly number. The result is not precise. It does not need to be. It tells you whether you have 6 weeks or 6 months, and those 2 situations require completely different responses. Know which one you are in before you do anything else. Within the first few hours, you need to clarify the terms of the separation. This is not optional and it is not awkward. It is financial information you are owed. What is the severance amount, if any, and when does it arrive? Is there a separation agreement you need to sign before it is released? What happens to your accrued PTO? Whether it gets paid out depends on your state and your company policy, and you need to know today. When does your final paycheck hit, and will it include the current pay period or stop before it? When does health insurance end? Some plans terminate the last day of your employment month. Others run through the end of the calendar month. That single date changes the urgency and cost of everything that follows. Write all of this down in the same place as your account balances. You now have a 1-page picture of your actual situation. Most people do not have this by day 2. You do. The same day, you freeze discretionary spending, not as a punishment, as a default. Streaming services you forgot you had. The app subscription that renews quarterly. The gym you have been meaning to cancel for 4 months. You cancel them now, not later, now, because the friction of doing it later is exactly why people do not do it later. You are not cutting these permanently. You are cutting them until you know what your monthly income will be and when it will start. That distinction matters. This is a pause, not a lifestyle collapse. With that done, you sketch a 90-day bare bones budget. 4 categories: housing, food, utilities, transportation. Everything that keeps you sheltered, fed, connected to power, and able to get somewhere if you need to. You are not optimizing this budget. You are not making it inspiring. You are making it functional. What is the minimum number of dollars per month required to keep the foundation intact? That number becomes your floor. Everything above it is a decision you can make deliberately rather than accidentally. The last thing you do in these 48 hours is look at your savings and investment accounts and make a single decision, which is to not make a decision. The impulse to move money when everything feels unstable is understandable and usually wrong. If you have money in a high yield savings account, it stays there. It is already doing the right thing. If you have money in a brokerage account that is down, the loss is not real until you sell. And selling into fear is the version of this story that costs you years. The only question worth asking right now is whether your emergency fund is liquid and accessible. If it is, you are in a position. A difficult one, but a position. You do not need to reorganize everything. You need to not break anything. By the end of hour 48, here is what exists. A written account balance, a list of fixed monthly obligations, a cash runway estimate in days, clarified terms on severance, PTO, final pay, and benefits, a discretionary spending freeze, a 90-day floor budget, and a decision to leave your investments exactly where they are. That is not a plan for the next 3 months. That is the foundation the next 3 months gets built on. The foundation is set. Now you build the system that keeps it from cracking over the next 30 days. The first thing you do in week 1 is file for unemployment. Not this weekend. Not after you have updated your resume. Today. The clock on your benefit eligibility starts from the date of your application, not the date you get around to it. Every day you wait is a day you may not recover. The process is state-specific and occasionally hostile in its design, but the documentation you need is consistent. Your last employer's name and address, your dates of employment, your final salary, the reason for separation. Laid off means involuntary, and involuntary is what qualifies you. After the initial application, there is a waiting period in most states, typically 1 week, during which no payment is issued. You cannot skip the waiting period. You can make sure you do not extend it by missing a certification deadline. Set a recurring reminder for your certification day. Treat it like a bill due date. It is. The weekly benefit will replace somewhere between 40 and 60% of your prior income depending on your state. It is not enough. It is also not nothing. Know the number, it goes into your runway calculation immediately. While that application is processing, you make calls you will not enjoy making. Every fixed bill on your list gets a conversation. You're not asking for forgiveness, you're asking for options, and every major creditor has them. The script is short. You call, you say you have recently been laid off, you are managing the situation actively, and you want to understand what hardship programs or temporary accommodations are available before you miss anything. That framing matters. You are not behind. You are proactive. Proactive customers get different responses than customers calling from a collections queue. Your landlord or mortgage servicer, your utility providers, your credit card companies, your medical billing offices if you carry any balances. Each of them has a protocol for this exact situation. Some will defer a payment, some will reduce a minimum, some will suspend interest temporarily. You will not know until you ask, and you cannot ask later what you should have asked now. Write down who you spoke to, what they offered, and any reference numbers. This documentation matters if anything falls through. Then you rebuild the budget from scratch, but not monthly. Monthly budgets fail during layoffs because the math feels abstract until a specific bill arrives and you have not been watching closely enough. You budget weekly. Every Sunday, you look at the next 7 days. What is due? What is coming in? What the gap is? You are not forecasting a quarter. You are managing a week. 7 days is a time frame where every number is visible and every decision is still correctable. Your high interest debt gets a rule, and the rule does not flex. If you carry credit card balances at 18% or higher, you stop paying more than the minimum right now. That sounds counterintuitive. It is not. Cash is protection during unemployment. The interest cost of carrying a balance for 90 days is real but bounded. The cost of running out of cash before income resumes is unbounded. You protect the cash. If the hardship call with your credit card company produce a temporary interest reduction or payment deferral, you use it. That is what it exists for. Health coverage gets its own afternoon. You have 3 realistic options and they do not all cost the same. Cobra continues your exact current coverage and you pay the full premium, often $800 to $1,200 a month for an individual. The marketplace through healthcare.gov triggers a special enrollment period the day your employer coverage ends, not the day you were laid off, the day coverage actually terminates. Marketplace plans at your new income level may qualify for significant subsidies. If a spouse or domestic partner has employer coverage, getting added to their plan may be the simplest and cheapest path. Compare these 3 options before your coverage ends, not after. A short gap is not automatically catastrophic, but it is a risk you take deliberately, not accidentally. The quick income question is simpler than it feels. You are not looking for a second career. You are looking for cash that does not consume the hours you need for your actual job search. Freelance work in your field if the opportunity exists. Selling things you own, short-term contract or project work if your industry has it. The constraint is time. You give this a fixed number of hours per week, you decide the number in advance, and you do not exceed it. The job search is the priority. Side income buys you runway. It does not replace the search. At the end of every week, you update one simple document. Current cash balance. Estimated runway in days based on your floor budget. Bills due in the next 14 days. Unemployment status and expected payment date. Any open negotiation conversations and their outcomes. 2 minutes of updating. Complete clarity. You always know where you stand, which means you always know what the next action is. 30 days in, the system is not exciting. It is intact. That is the only thing it needed to be. 30 days in, the system is intact. Now you have to decide how far you can carry it. By day 31, you know your actual burn rate, not the estimate you made in the first week. The real number, what left the account in 30 days of managed spending. You know what unemployment replaces and what it does not. You know which hardship calls worked and which ones produce nothing. Now you make the structural decisions, the ones with longer tails and higher stakes, and you do not make them under pressure if you can avoid it. The first decision is your primary lever. You have three options: cut deeper, earn more, or restructure what you owe. All three are available. Only one should be your main focus, because splitting attention across all three produces mediocre execution in each. If your runway is already past 90 days, your lever is probably earned income. Freelance, contract work, consulting in your field, anything that buys time without derailing the search. If your runway is under 60 days, the lever is likely structural, cutting a fixed expense at the source. A car you can sell and replace with something cheaper. A lease you can exit, or a roommate arrangement you can accelerate. A subscription or membership with a contract you can negotiate out of. These are not comfortable decisions. They are also not permanent ones. Temporary is different from forever, and the clarity that distinction provides is worth writing down somewhere you will actually see it. The 30-day decision calendar is the tool that keeps you from making irreversible choices in reversible moments. Pick a date 30 days out and put every major potential decision on it. Moving to a lower cost city or moving in with family, selling a vehicle, tapping a retirement account, refinancing a loan, withdrawing from an HSL. Each of these has a cost that is hard to see in the moment and easier to see with a month of distance. Some will still make sense on that date, some will not because the situation will have changed. The calendar is not a delay tactic. It is a filter that separates urgency from importance, and in a job search, those two things are frequently confused. Retirement accounts and stock compensation require specific caution. If you have unvested equity, you need to know your vesting schedule and whether a layoff triggers acceleration or forfeiture. This varies by plan and by company, and the answer is in your equity agreement, not in your memory of what someone mentioned at onboarding. RS that have vested but not settled within a window may expire. Options have exercise deadlines that shorten after termination, sometimes to 90 days. If you miss the deadline, the asset disappears. Know your deadlines, write them on the calendar, and consult a fee-only advisor if the numbers are large enough to warrant it. On 401k funds, early withdrawal before 59.5 means a 10% penalty plus income tax in the year of withdrawal. If you are considering it, run the actual number first. The cost is real and often larger than it appears when the account balance looks like an emergency fund. It is not an emergency fund. It is the last lever, not the first. Credit score protection is maintenance work, not heroic effort. The rule is simple. Automate every minimum payment. Everyone. Consolidate due dates if your bank allows it so everything hits within a 2-day window and one weekly check catches everything. If a hardship agreement with a creditor produced a deferral, get the terms in writing before you stop making payments. A verbal agreement that does not appear in writing is not an agreement. A payment marked as deferred but coded incorrectly as missed is a credit event you will spend months correcting. The email confirmation costs you 3 minutes to request. The correction costs you considerably more. Thinking about re-entry now, before it happens, costs nothing and saves significant money. When you accept an offer, you will likely face a gap between last paycheck and first paycheck of 2 to 4 weeks. You need cash on hand for that gap. You will also face insurance transitions, a possible change in commuting costs, possible childcare costs if your schedule shifts, and the rebuild of the emergency fund you have been drawing from. None of these are surprises if you planned for them. All of them are expensive surprises if you did not. Set a re-entry cost estimate now. Even a rough number gives you a target that keeps you from spending the last of your cushion 2 weeks before you would have needed it. The document you built in week 1 gets a weekly update for the entire 90 days. Current balance, current runway in days. Any deadline requiring action in the next 2 weeks. 1 sentence on where the search stands. You are not writing a journal. You are maintaining a dashboard. It takes 2 minutes. It means you never lose track of where you actually are. Here's the action that matters right now. Pick one item from each of these 3 sections, the stabilization moves, the structural decisions, and the re-entry planning, and take 1 step on each today. Then put your 90-day runway number in the comments. The number makes it real. Real numbers produce real plans. That is the only way this works.